membuka pendaftaran baru S1 dan S2. Undergraduate Program, Graduate Programs, Non-Degree Programs, IPMI Business School Campus, Jalan Raja Wali Timur 1, Nomor 1, Kalibata, Jakarta Selatan.
Welcome back to Bull and Bear News. We're still here to talk about how to make money in stock. We will be opening our last call regarding how to make money in stock. That will be answered by this expert. Remember to call 555-BULL or 2855. Oh, and here we have a caller. Hello, who is this?
Hi, my name is Roger.
Hello, Mr. Roger. What is your question?
Well, I have been listening to your talk show and I think it's really informative. I currently have a portfolio of 10 different stocks. My stocks diversified in sectors and different prices as well. Some of them are blue chip and the rest are not. However, currently my portfolio is down by 10% and I'm not sure what should I do. Should I just sell some of it or what? Just wait? Any advice?
Okay, Mr. Roger, don't hang up just yet. Let's hear what the expert has to say about your problem. So, perhaps Mr. Abraham would like to help Mr. Roger about it.
Mr. Roger, don't panic. As we said earlier, then when your stock falls beyond 8%, then just lose your stock. Don't feel bad about it. Just buy other stock that is going uptrend and give you better profit to compensate the loss.
Yes. Also, there's a theory in the canceling approach that tells you to identify whether your stock is laggard or leader. So, how do you identify them?
Well, I have some laggard stock and some leader stocks. I bought the laggard one because it looks cheap and might go up faster. At least that's what I thought it would be.
Well, then you must get rid of those laggard stock. It will bring you no good. Buy stocks that are the top 3 in the sector.
Yeah, I think it's also common for most people to have that kind of mindset, to hold their losing stock and hoping that they will go up and to sell their winner stock to make a quick profit, right?
Yes.
But I think that's actually a bigger recipe for losers, right?
Yes.
Yes, I agree. That also there's a fast and easy way actually to check whether a stock is considered as a leader or a laggard. You can use relative price strength or RS rating that will show you the performance of a stock within 52 weeks. And for example, a stock of 99 tells us that the stock actually has outperformed 99% of all other companies in terms of the price performance. So don't buy stock that has lower than 50% RS rating.
I see. Okay, so that is a well-made point, Mr. Bernie. So, Mr. Roger, we hope it's clear for you.
Yeah, I think it is. It's so clear. Thank you very much. I will cut loss some of my stocks and reinvest my money with leader stocks.
Thank you.
I want to add another point that is also very crucial in determining what stocks to buy. A good stock must have many institutional sponsorship. For example, like institutional investor, mutual funds, pension funds, hedge funds, insurance companies, bank trusts, charity, education and many so on. This is crucial because the demands that are caused by all these institutions will help push the price of the stock.
I see. So, what do you think will be a good number for institutional sponsorship?
Well, in theory, a winning stock doesn't need a huge numbers. About a minimum of 20 institutions should be reasonable enough.
I see.
And also buy stocks that have better average recent performance records and stocks that have added more institutional sponsorship in recent quarters.
Okay.
These should be good indicators for you.
I see. So about 20, right?
Yes.
Thank you for the information, Mr. Faris. And since we are coming close to the end of our talk show, there is one important point that hasn't been mentioned in the discussions before, that every investor should take a look at this point before plunging their money into stocks. And this last point will be answered by Mr. William O'Neill himself. And everybody, please welcome Mr. William O'Neill. Hi, Mr. William. It's great seeing you.
Hello, how are you?
I'm good. So, Mr. William, thank you so much for joining us tonight for the talk show. Mr. Abraham, Mr. Faris, and Mrs. Reni here has been such a terrific student of yours, and have been giving a lot of tips on how to invest your money on stock.
Oh yes. They have been practicing the rules in their trading strategy and that's so giving a lot of training to many people. I'm very proud of them. There are no experts in stock analysis, and I believe I've been making huge profits from it. Isn't that right, guys?
Yeah.
So now, Mr. William, to conclude our discussion tonight, what is that last aspect that all investors should take a look at?
I believe Abraham, Rennie, and Farid here has mentioned the Cannes Slim theory earlier that indicates there are things that needs to be focused on when building stocks. I will just give a brief recap for all the points. First is a C. Is for current quarterly earning per share. It must be higher than 20 or 25%.
Okay, so currently earning per share higher than 20 to 25% per share.
Of course. Then there is a for the annual earning that must also be higher than 20-25% too.
Okay, so annual earning also higher than 20 to 25%.
There is N for new heights, technology management, or anything new in positive way is important factors.
I see. So N is for new highs or technology or management that every investor should take a look at. What's next?
S for the supply and demand factors, in which you should choose stocks that are high in demand.
Okay, so choose stocks that have high supply, high demands, right?
Yes, right. The S for the supply and demand factor, here which you should choose stocks that are high in demand.
Okay, so supply and demand factor, don't forget, choose stocks that are high in demand.
L for leader or laggard stocks, where you should sell those in your portfolio that has lower than 50% RS.
Okay, so leader or laggard, right? So choose stocks that are leaders and not the laggard ones.
And I for institutional sponsorship, you should find stocks that has minimum 20 institutional sponsorship to ensure the growth and interest of the company price.
Right, so institutional growth, minimum about 20 companies to ensure the growth, right? And what is the last one?
And finally, the most important key factor is the aim. For market direction, you have to understand whether a stock is going south, a bullish or bearish markets.
Right.
There is no point to pour all your money in during a bearish market and hoping for quick gain.
Right.
You need to know whether you are in the early or later stage of bearish or bullish markets and how is the market doing now.
Right, so pay attention in market direction, right? Whether you're in bullish or bearish market. So what is a good indicator of a general market?
There are a few commonly used indexes to read the market like S&P 500, Dow Jones, Nasdaq and NYSE. Or in Indonesia you may call it IHSG.
So IHSG, right?
Yes.
Yes.
Keep an eye on these indexes closely to give your signal. So when the market is showing bullish moments, do not jump in straight away, but give it a bit more time to recover and confirm the uptrend before you jump in.
Right, so how long do you think is a good timing before you jump in?
So, when is the best time to make money? The first few days of improvement cannot tell whether the rally will succeed. The powerful indicator is when the rally has went through for 7 days long, and also look for indication of high volume during the fourth day to tell whether it will carry on or it will drop again.
So first or 3 days is not a good indicator, and you have to stick for 4 to 7 days and look for the volume indicators, right? Okay, so when do you think is the best time to make money?
The best time usually occurs on the first or 2 second years of a normal new bull market. You can make big money here. The key is to stay on the top, is not to predict where the market is going, but to know and understand what the market has done in the past few weeks and what is currently doing now.
Okay, so 1 or 2 years in a normal bull market, right? And remember not to to predict the market, but instead you have to see what's happening in the past few years or in the past few moments before you jump into buying the stock. We hope that you learned something useful tonight, and thank you so much for watching. And I'm Greta, your host for tonight, and see you again in Bull and Bear News next week.